The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. Tommy O'Brien coming live from TFNN, and we got quite a morning to kick things off, folks. The jobs number coming in for September, and you got quite a number, 254,000. Let's jump to it. The unemployment rate, 4.1%. And here are the estimates before we break down the market, because we got moves. What do we have? We have the market higher. You have yields going higher as the Fed probably does not need to cut to at least the degree that we've been talking about on this show, how many cuts the market's priced in. Market was looking for 150,000. How about 254? Unemployment rate was estimate 4.2. We come in at 4.1. That number, 2/1,000ths away from 4.0, actually. The actual unemployment rate, I said this before, it's too bad they don't break these numbers down, even in articles like this, to at least the second decimal point, if not the third sometimes mattering, because the unemployment rate comes in at 4.051. You come in at 4.049 and you're down to 4. You come in at 4.051, you call it a 4.1. Nonetheless, we're approaching 4% unemployment. Average hourly earnings, you beat as well. So what do we have? More jobs, less unemployment, and higher average hourly earnings across the board. And let's get into the markets. There's your spike higher. We were trading at about 57.60. We just crossed 5,800. We're up by 48 points in the S&Ps. NASDAQ 100 up by 1.25%, 20,242. We're up by more than 250 points. Dow up a similar 260 points, which is only 0.6% in the positive in the Dow. And how about the Russell? Up by 1.9%. We'll call it at 2239. Bitcoin participating to a degree, up to 62,000. Crude dealing with its own woes in terms of Middle East geopolitical tensions. We hit 75 this morning. We're trading at 74.37 in crude. Gold, now we got dollar strength, so gold is pulling back. Not as bad as maybe it could have been. I mean, you look at the move that we have had in the dollar, right? And gold just chopping around between 2650 and 2700. Meanwhile, look at the move and the strength of the dollar as yields have rebounded higher, and that is a move for you, man. 102.51 right now. As you can see, back to the spikes of August 5th is where we are now. We're into that bar of August 5th. And why is the dollar having strength? Well, the dollar's having strength because that is quite a move in yields right now. You got the 10-year down 25 points right now. And I'm going to pull up the yield curve as we break it down because, boy, yields are moving higher, man. So the 2-year, how about 15 basis points, man? You came into this at almost 3.7. You're at 3.86. The 10-year right now, approaching 4% again, up about 10 basis points. The 30-year up by 7 basis points. But that 2-year, indicative of what? Indicative of where the Fed is going. Where is the Fed going? Well, very hard to make the case that they're going to be going with 50 basis points come October in light of where this economy is, where wages are. They have two mandates: full employment and price stability. Unemployment is on its way to 4%. In their guidance, they're looking for estimates of unemployment approaching 4.4% by year end. It's October 4th, and unemployment just went from about 4.2 to 4.05. You're going to see the number out there of 4.1% unemployment. Just know the number is actually 4.051, because you might as well call it 4. That's where we're on the way. Pretty remarkable action to kick things off, man. You jump back to some of the analysis in terms of what's going on. We talked about yields. That's a big driver, but the other story out there, thank goodness, dock workers back to work. 62% is the number they got, and they're going to work out the details when it comes to automation and how that plays out. Interesting, because that might be the biggest detail of all. But nonetheless, thankfully, both sides realized that it would probably be too much added stress on both sides. Maybe the government would step in. Nonetheless, they got a deal done. They're back to work. 61.5% increase over the next 6 years. Now, I heard Leo Brainerd out on Bloomberg today. She's a member of the Biden administration, okay? So I was saying it before, I'd love to know what they were making prior to this deal, right? And she was stating that some years back they had no raises, other years they got a raise for $1. Yes, they're making substantial sums, but in the age of higher costs across the board, people seem aghast sometimes that UPS contract, right? UPS drivers making a good six figures. Listen, you're a worker for a profitable company for decades, working in it. There's no problem with making six figures right now. That is a livable wage at this point, man. So they're going to get 61.5 over the next 6 years. But years previous, when we had inflation at 10%, they were supposedly getting no raises, even $1 some years. So you got catch up, man. You got catch up to a certain degree when you got generational inflation. That's what you saw happen with the UPS contract. That's what you're seeing happen here. Nonetheless, a good thing that strike is over for all of us. And that had the potential, when inflation has been such a boogeyman recently, justifiably so, that was probably the biggest thorn that really could have thrown a wrench. Because, man, you deal with a month blockade there in terms of a strike and exponential the damage it does already. Okay, I'll pull up later in the program. We're going to talk about it. Already, it's going to take a month, maybe months, to clear the backlog they have of ships to catch up, because they usually deal with so much supply anyway. To catch up for just missing 4 or 5 days, they have a lot of work to do, and that's going to take some time. So there will be some impact, but nonetheless, thankfully just a few days, and we will get over that one. Yeah. So you check out this move in the dollar, right? We got to keep our eye on yields and currencies, which are going to drive the action today. We're only 42 minutes into that news number in terms of the jobs number. Boy, quite a move. That's a daily. You look at things on a 5-minute basis, it was a straight shot to 102.64. We were trading at 101.90 on that dollar. Just a mammoth move. That's why it's going to be wild to see how the market digests this on the open in 17 minutes. You have yields continuing to rise. We did get a spike to 112.31, but as you can see, chopping around at about the 113.04 level on the 10-year. And as I mentioned, you are approaching the 4% bound on the 10-year. Yet again, 113.03. And yeah, on a daily basis, pretty interesting that we're right back to where we were at the beginning of the year. Pretty remarkable. Now, you look at the move that we had from April. The 382 brings you almost a full point even lower, and that's just the 382. And that would bring you to about the 112.11 area, maybe the nice round number, 112 down there. The highs back in March got you to about 112.04, somewhere in that range. Maybe got another point to the downside. There were a crazy amount of cuts. Is that what BlackRock called it? No, he called it, Larry Fink called it insane. I think insane amount of cuts we were talking about. We've been talking about it as well. Crazy, insane. They're mathematical probability terms. No, but what you have to, wait, that's not what I wanted. Hold on. That's the CME group, excuse me. I was going to pull up that CME Fed Watch because this is going to be interesting to see how this, look at that. Now, we had been looking at this number. Look at this. A week ago, there was a 53% chance that they were going to cut by 50 basis points. November 7th, and now that chance is just 10. It's an outlier. Market still thinks there's a 90% chance they will be cutting, though, when they convene again in about 4 weeks from right now. We'll talk about some of that action. It's going to be an interesting Friday, folks. We're coming off that port strike. We got jobs numbers. We'll take a look at Rivian trading lower, some other equities as well. Stay tuned. I'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We're going to chart the S&P here. 50 points, but 49 as we make that comment, up to 57.98 right now. This market charged higher. We take a look at it on a daily basis. You're chopping around near 5,800. You pull back, and today we're going to get it all back. Be interesting to see if we actually plow higher at the open, because, man, if you get a big bar and you only got to get like 30 points above where we're at right now, and you would have quite a bullish engulfing. Don't quite have the bottom side of that, man, but you're talking about encapsulating trading going back to when we first made that thrust higher to all-time highs on September 19th. It's October 4th, so about a couple weeks, 2 to 3 weeks ago. You'd encapsulate it all with one green bar, and you only need 30 points from where we're trading right now on a jobs number like that, man. Yeah, very possible. All right, what else do we have going on? How about CVS? Yeah, they've been struggling, and now they're going to do a whole strategic review. And the headline out there, considering a breakup. Interesting, right? Now, you take a look at their chart, and that's quite a haircut. You begin the year at $83 or so, about 80, and yeah, look at that earnings 6 months ago. You take a look at a longer-term chart of this thing. 113 back in 2015. You double top. Look at these double tops, right? Man, if you were ever in this equity on the run up, this is when you really want to have your spikes up, when you're challenging an area like this, right? Because look, you almost got one more shot, you got one more, and then boom, you go from 104 in the beginning of 2022 to 62 at a time when the market's accelerated higher. They're higher this morning with the market to 63.57, but yeah, they're considering a full breakup, man. No perfect option for a split, yeah, but they're thinking about splitting up that company. So they have their health insurer, and then they have the major pharmacy benefits manager, Caremark, Aetna, and yeah, that could impact the whole up and down vertical integration there for sure. Now, Rivian out this morning. This has been a tough pullback. The EV market continuing to struggle. And this one is supply issues, but Rivian, they're going to open down 70 pennies almost, which is a lot when the stock's trading yesterday at 1078. You're trading at 1008. You spiked to 977. And the news out there for Rivian, yeah, as they slash their production forecast, they missed their delivery expectations, and they're talking about supply problems as well. So they lower production target from 57 to between 47 and 49. Folks, that is a mammoth number on a percentage basis, right? Huge. They produced 13,000 vehicles in Illinois and delivered 10,000 vehicles during the third quarter. But it's just a big problem when they're not going to ramp it up to that degree. Supply shortage impact began in Q3 of this year, has become more acute in recent weeks and continues as a result. Their annual production guidance is going to get slashed. I mean, it's pretty tough when you're only putting out 50 to 60,000 cars over a quarter and you got supply issues. Now, you take a look at Rivian. There's Rivian on a short-term basis. You're going to open lower. It's been quite a slide. We were just trading July 12th. Less than 3 months ago, pushing almost $19. You're going to open it around $10. And you take a little bit longer term time frame at this equity. This is a weekly. Now, the bottom side of this doesn't exactly line up, right? Let's just even remove that part of things. But on the top side of things, you can see this channel line. I mean, not good in terms of where this thing may be going if you're talking about this channel line, because 0 is right here on this chart. That's why if you try and find a bottom portion of this channel line, it basically leads you to almost 0. Which is dicey because they're beautiful cars and they probably have a future. So, risk reward, you got to keep your stops in place, but you can see how even trying to find a bottom channel on this thing pushes to almost 0 from where we are right now. So not sure that really lines up, but on the top side, it is a downtrend of lower lows, lower highs, and continuing with some problems to 1008. And right now you're talking about a company valued at $10 billion. That's where the conversation starts to get a little interesting from a risk-reward perspective, taking a flyer, though, because you got a company that produces great vehicles. They have a deal with Amazon, right? And who's to say that a company like one of those tech companies wouldn't come in and buy that company for $10 billion, or to that degree? A company like Apple even. Probably not down the line, but when you talk about that, you have to consider the pure value of that company. $10 billion, not a bad deal. When you talk about, I see those cars everywhere. They are beautiful cars, man. The EV market right now, yeah, we're in trouble. We as in they have some problems. But nonetheless, Rivian, they're going to open it around $10 today. We'll see how they react. If you are looking to get in this equity, you can always take a flyer. Maybe you're going to come back down and test these lows. But as you begin to bump up against that channel line, really keep an eye on it, because ideally you want to see it break above, come back, test that channel line, and then you go. And on this last one, I was watching it, and it came back, and it didn't test it, man. You broke right through it, and then what'd you do? You traded up, you touched it again, and where'd you touch it? At $14.72, and just like that, we're trading at $10, and we're about to get a 9 handle on Rivian. All right, we check around some of the equities. We get Amazon shares. Now, Amazon, we had a pop last night. That was probably on the port striker deal, right? I'm assuming that Amazon was already trading higher, up to almost 185.50 this morning from 182 yesterday. You had mixed markets. Then you get the acceleration for Amazon on the jobs number from 184.50 up to 186.50 almost. You're going to have Amazon shares opening up almost 2% to 185.74. We jump over to Apple. Apple shares, you're going to open almost $2 higher to 227. We jump over to Microsoft. Opening at around 419. We're trading right now 418.62. Google shares 168.55. You were up at almost 170. Nvidia trading higher, of course. Checking out this morning, almost 125 for Nvidia. Nvidia is not going to go out there and buy Rivian, but it is interesting just on a pure value basis. You got a company like Nvidia with 25 billion shares outstanding, and meanwhile you have a company like Rivian that's only worth $10 billion pure, right? So in theory, it's only a 40-cent movement in the price of Nvidia to purchase the entire company. And, you go to a company like Apple, And Apple doesn't like to play this game, okay? But Apple has 15 billion shares outstanding. So, they could buy Rivian for $1 a share for $15 billion, right? In theory. And you're trading at 227 right now, and you closed at 225 as of yesterday. So they're going to open up $20+ billion. If they find any value in a company like that in the world of EVs. But guess what? EVs, you're in a tough space right now. I'm not sure Apple is in the market to get into the EV business with everything that's going on. But it is interesting on a longer-term basis, right? A longer-term basis, I like getting into a company that's valued at almost single-digit billion dollars because obviously the multiples from there can be exponential. All right, speaking of exponential, we'll see where this market goes on the open. We got about 3 minutes till the opening bell. We'll be right back for that opening bell. Market's just off the highs. We touched 5,800 in the S&Ps. We're trading up 42 points. We'll go over some of those jobs numbers again after the opening bell. We'll stay right there. We'll be right back, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P up by 45 points. That's about 0.8% in the positive. NASDAQ 100 up by 1.2% right now. 237 points higher at 20,229. Dow up 228, about 0.5%. And you got the Russell up by 1.4% to 2230. You jump over to crude. Not really dependent on the jobs number, more so what's going on in the Middle East right now, up to 75.06. You're trading right now up 62 pennies coming into Friday weekend trading, 74.37. Gold contract holding up relatively well. $15 off the lows right now at 26.69, and all things considered, we were just trading at 26.77. You're only off by $8, and that's not bad when you look at the move in the dollar, because there's been no pullback in the dollar. As the gold contract has bounced, you're only off by $8 in gold, and meanwhile you had the dollar spike from 101.87, we'll call it, to 102.57. Quite a move, and the dollar spiking because yields, of course, and we're pushing the lows in terms of price. You get the 10-year negative by 27 ticks right now, and that's pushing our 10-year 3.96, approaching 4% right now. 3.96, the yield on the 10-year. We talked about the yield curve. The move on the 2-year, mammoth move on the 2-year. Yeah, from 103.29 to 103.21, and that is a huge move on the 2-year. And you take a look at the daily, and we're right back to where we were on August 5th, and you're not even that far away from where we were actually on January 12th, which was 103.05 or at 103.21, but that's down from 104.16 on the 2-year. And yeah, so we talk about the 10-year, we talk about the 2-year, and what's been happening? Well, we get some flattening. Yeah, there's your yield curve. Oh, that's not going to let me into the Bloomberg terminal. But nonetheless, you can see the 210, yeah, flattening a bit. We were over 20 basis points, the 210, and now we're back to under 10 basis points. The difference there, And when we get to those two yields, we're at 3.87 on the 2-year, and we're now only giving you 3.96 on the 10-year. So again, what's been happening, right? We thought that the Fed was going to bring down rates dramatically faster. The 2-year had come down. Now the market is repricing the probability of Fed rate cuts going forward, and you're not getting the type of premium that you were for a 10-year because the 2-year is now at a higher level yet again, approaching 3.87, and the 2-year, mammoth move, up the most along the curve, 15 plus basis points, we'll call it. The 1-year up by 15 basis points as well. There you go. All right, and what else did we have? Yeah, we talked about the yield curve. A couple others. How about construction jobs? Refinancing, housing, the expectation of rates coming down. 25,000 in construction was in this number. As Bloomberg puts it, talking about a drop in mortgage rates starting to have an impact in the housing market. Interesting to see whether residential investment returns to a positive contribution to GDP. That has been weighing on growth as recently as the second quarter. Yeah, 50 basis points, very hard to make. You know what, though? 50 basis points I thought was going to be pretty hard to make last time, and they did it. So we'll see where they go. Yeah, you got a lot of analysts out here rephrasing what they thought was going to happen. You know, one negative that they point to here, if you're looking for weakness, is, as they put it, temporary service employment continuing to cool. This sector has been viewed as a leading indicator for unemployment, and temporary help services is in black here. You know, if you're looking for a negative, that's quite a disclaimer because, man, you are hot across the board, right? And yeah, wage number, we're 4% year over year, okay? Most inflation measures have inflation under 3%, all except the core CPI. That means real earnings, okay, are above inflation. What does that do? Potentially fuel consumer spending. And guess what? Who is making the 4% wages? 254,000 more workers this month, September, than were the prior month, right? You're adding workers at 254,000 at the same time that wages are still hot. You have to multiply the number of workers times the wage. And that's the amount of money going into the economy, right? Pretty remarkable. Just getting some of the others. 7,000 in manufacturing was the number there. And yeah, we'll talk a little bit more about it. Nonetheless, strong numbers, man, and look for less rate cuts to be priced into this market. And we'll see if it holds, but the market likes it so much. So far, I should say, and it should. Because, regardless of whether the market has gotten used to a 10-year at 4%. It's, we came into today at 3.8. Of course the market can handle that. That's what it's saying, I think. In this type of environment, this type of growth. NVIDIA pulls back a little bit on the open, still up by almost 1%. We check in on Amazon on the open. Even trades higher. Amazon up by 2.85%. I'm sure that strike was weighing on them. You see that first thrust higher in the pre-market from almost 182 to 185 in the second leg. On the jobs number, we jump over to Walmart. They got a little bit of a thrust higher on that port deal as well, but they give it up. Walmart actually flat. Check in on Rivian. Okay, up to 1039. Market not as worried at this price level, I think. Everything is expectations, right? Only down by 3.4%, because that is quite a restatement of their production numbers on a percentage basis, going from the high 50,000s to maybe the high 40,000s in terms of what they're going to be producing. Down by 3.3%. We check in on crude this morning. 74.09, backing off a bit. Apple shares give it back a little bit on the open. Google shares hold on, up by 1.2%. We got Netflix up by 1.3%. Yeah, with this type of dollar strength, combined with where the Bank of Japan is, look at this weakness, 148.45. And you talk about a turnaround, man. We put it on a daily. Now, what's interesting is you're coming right up to the 382. The 618 is the inverse of the 382, right? So this move, you are again coming right back to that 382. You're right near the round number of 150. Maybe that on the yen is where you get a little bit of pressure. But boy, the dollar's what's driving the action right now, man. 102.51, holding on to the gains of today. And I imagine so, because this market might have gotten a little bit ahead of itself, as it has prior, when you talk about the amount of cuts that we had priced in by the June meeting. And June's going to be here before we know it. I mean, we've been talking about it. Let's go back to the CME FedWatch tool, okay? Where are we in June now? Let's see. Drum roll, please. Yeah, look at this. Okay, this is awesome. So we had been focusing on the 3 to 3 1/4 range. Okay, if you recall, the 3 to the 3 1/4 range, that was the range that we reached in June, and you can see it a week ago. The market was pricing that by the June meeting, 6 meetings out, that the target range was going to be at about 3%, the lower boundary. 35% probability. Okay, where are we now? 8%. 50 basis points. Less cuts priced into this market over the next 6 meetings in the next week, and maybe we have room to go from there. We'll talk about this. We'll be right back, folks. Stay tuned.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have markets pretty much where we open the session right now. Up by 42 points on the S&Ps. NASDAQ 100 holding the gains, up by 1.2% right now. Dow up a similar 260 points as the NASDAQ 100, but only up 0.6%. And the Russell leading the way, up by 1.3%. We check in on gold. Yeah, gold, man. Look at this bounce. Gold is strong, right? You look at this move with dollar strength where you are, priced in dollars, 26.71, mammoth move in yields, mammoth move in the dollar, and you only have gold pull back $5. That's indicative, man. Gold does not want to pull back right now at all in this market, even when that's what yields look like as you spike lower with the 10-year off by 25 basis points right now. And yeah, we're talking about a yield of 3.95%. 3.95, the yield on that 10-year. Now, it is interesting, going back to the port workers, right? So the deal out there, what do they get, 62% raise? It's amazing how things go in terms of the conversation, the marketing, the publicity, because there's always outrage, feels like, when workers get raises, and it's not direct outrage, it's amazement outrage, right? Versus profits, dividends, buybacks, corporate pay, CEOs, board pay, etc., right? So you look at a number like 62%, folks, okay? And as I mentioned, and listen, if you got the numbers of their last strike, I would love to know the exact numbers of what their raises were from 2000 to 2024, because that shapes so much of the conversation over the raises that they're demanding over the next 6 years as a union. So the raises we're talking about, first of all, are 6 years. Still a big number, 62%, mammoth number. And they're making good wages, okay, period. What they should be. Everybody should be making good wages, working for good, profitable companies for their careers. So 62%. So I said to myself, literally, this is where I said, well, let's just say, because Leo Brenner, she was out on Bloomberg earlier, I was watching her interview. She's a member of the Biden administration. Everybody has their bias, but she was mentioning that some years past, they got no raises. Some years past, they got $1. I would love to know the exact numbers, even going back to that time that we faced the huge inflation numbers in COVID. So let's just say you take this the last 10 years, you go the last 4 years, and then the next 6 years out. So you say from the years 2020 to the years 2030, okay? Because this deal they just made takes them to 2030. If you take 100, let's just say $100,000, okay? And you get a 5% raise yearly, and you compound it, and you go 10 years out, what do you think that brings you to? 62.89%. Yeah, that's it. It's a 5% raise from the years 2000 to 2020 to 2030, Now, I don't know what they made the last 4 years. That's not fair if they're getting decent raises over the last 4 years. But depending on what you're getting, take that into consideration, because 5% raises from years 2020 to 2030 is probably pretty fair across the board with where costs are, where employment is, and how that changes the conversation so quickly when you hear that port workers, career workers, union workers for companies that have been making billions are looking for the decade of the year 2020s, when we face generational inflation, to be at about a 5% raise annually over that decade, which could be achieved by a 62% raise over the next 6 years within their contracts. Keep that in mind, because I think that's pretty fair facing that conversation, because all I keep seeing is, my goodness, they make six figures and they're getting a 62% raise. And there's a lot more that goes into that conversation, as usual. All right, back to this FedWatch tool, okay? So, keeping in mind how quickly things change, it is remarkable, because we were talking about it, man. You go up and down the curve, remarkable where this market was priced, that somehow the market was pricing over the next 6 meetings that by the June meeting, we were going to be potentially at either 3 to 3.25 or 2.75 to 3. You add up those two percentages, that was where 60% chance that we were either going to fall by the June meeting of next year at 3 or 2.75. Now, the two of those combined for an 8% outlier. This could keep happening. We moved here in 7 days. This is one data point. And then, where things get even more interesting is that I'm not sure the next data point, okay, which is November 1st. We get the October non-farm payroll report. We have the election on November 5th. Is that right? And then we have the Fed meeting? No, what do we have? Is that right? Yeah, the 7th. Is that right? The 7th is a Thursday. All right, we'll take a look at that. But I was looking at it in terms of when that date lines up in terms of how far it is away. Nonetheless, you know, the next month coming at you, we do get the non-farm payroll, but what's going to happen is we're going to have so much disruption from Helene, okay? You have those storms. You do have a small disruption, not going to be as large anymore with the port workers, and so that data point is going to have a little bit of volatility. And so this one is the one that might be given more credence, because you probably have some adjustments coming down the line for the September number, considering the storms impacting so many states. You have the port strike going into that as well, and nonetheless. All right, where else we go? I was reading this story early this morning, and it's an interesting one from Bloomberg. Is this their big take? It might be. No. So what it really talked about is just how hard managing these multi-strat large funds are, and it almost went to how hard it is when managing any amount of money. But this is a Goldman protege. Eisler is his name. He manages about $4 billion. But you talk about some muted returns, man, to manage $4 billion. Here's your returns. 2021, 3%. 2022, 14.3, 9, and he's down 0.5% this year. Yeah. And he swiftly ascended the ranks, as they put it, at Goldman, becoming a partner by the age of 30. He knows what he's talking about, but man, it is a tough deal. And what they say here, you know, number one, cost of employees in terms of running this stuff. And you can't compete with the big dogs like Point72, Brevin Howard, and of course Citadel and Millennium out there. They make up more than 50% of the market, and the 10 largest account for 70% of the industry's assets going into that multi-strat hedge fund industry. Pretty remarkable. And yeah, pretty muted returns. And they talk about, my dad's talked about this before, how much room, and this guy's notorious, they give their traders. It's in here somewhere that, and supposedly he's vigilant, this guy, Eisler. He's got turnover that's crazy. Yeah, here it is. Hedge funds often cut capital or stop out portfolio managers when losses hit 5%. And this guy, his partner, is far stricter. Preservation of capital at these big firms is of uber importance in some strategies, this one so, and sometimes that can get cap gains though. Pretty remarkable. This market, holding on to gains. We got one more segment, folks. Stay tuned. We'll come back. We'll look at some equities. We'll check in on that dollar. We'll be right back, folks.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets trailing off a bit, still positive by 0.6%, but we do give back some of those gains. We were briefly above 5,800. We're now trading up 35 points at 57.84. NASDAQ 100 retreats a bit. We're about 100 points off of that high we got at 9:15. We came into the opening bell. Look, we got a little bit of selling going on here. Dow up by 250 right now. Russell holding on. We're up by 1.1. Giving it back, though. Look at the Russell. 17 points off the highs. We got some selling going on right now. Gold, as I mentioned, you almost got it all back. You are back to where we were trading right before that number, man. The gold, yeah. Look at this. The low on gold coming into 830 was 26.75.70. And we just traded to 26.75.60. And that is remarkable when you look at the dollar strength, pulling just off the highs, but the dollar just traded up 60 pennies from 101.90 to 102.50, and gold holding up. That is strength, man, for sure. And yeah, we jump over to your 10-year right now, 113.05, just below 4%, the yield on the 10-year, and you jump over to the 2-year right now, we're down almost a full 9 basis points, which is a big move on that 2-year, 103.23 right now. And you take a look at that yield curve one more time. Yeah, 2-year at about 3.85. We're up by almost 14 basis points. And the 10-year at about 3.95, up by about 9 basis points. But it is interesting that you have a little bit of flattening again going on for the 2 and the 10, verging to a pretty similar yield for those two curves. We check in on Rivian shares. They trade lower with the market off that bounce. Rivian off by 6.8. We talked about Amazon up by 2.5% for Amazon. Walmart gives back some of those gains with the port strike, getting a deal, but still up by about 0.1% for Walmart shares. You check in on some of those others. And how about Zuckerberg, man? Up 0.6%, and Zuck, he's ahead of Bezos. Bezos, what's going on, man? Get jazzy. Get him going. Zuckerberg, second richest person in the world, only second to Elon Musk. And look at Musk, up by 3.1%. Folks, thanks so much for tuning in. We got our man Basil Chapman. He's coming up with the Tiger Technicians Hour next. I see him in there getting ready right now. Have a great weekend. Have a safe weekend. Stay tuned for Basil, folks, and we'll see you Monday at 9 o'clock. Have a great one, everybody.